Good day, everyone. This is Patrick from EasyFX Code Trading System, and it's Saturday, the 5th of March, 2022, and this is the weekly technical analysis for the Euro, the cable, and the Aussie dollar for the second week of March. Let's begin with the Euro. You can see on both these pairs here, the Euro and the cable has fallen lower, while the Aussie has climbed up higher. So let's take a look at the Euro here. And yesterday on Friday, it had a significant drop of over 170 pips, right to the 162 pip extension of this reversal move. This was already, it's been since a couple of weeks ago. And at the start of the week, it gapped lower, but managed to hold on on Monday. But however, it started dropping from Tuesday onwards, right down to the support for now. Let's take a look on the weekly time frame so you can see the gap clearer. That's the end of the previous week and opened down here right at the swing low. It attempted to retrace up higher or pull back up higher, but failed to close the gap and then started falling from the Tuesday. So that was the previous week's close was up here. It was attempting to pull back higher, but then at the start of the week, it opened right here, right at the swing low, and attempted to recover back up. And then from Tuesday on, it fell hard, and that's all due to the conflict in Ukraine. And because of its proximity to the conflict, the Euro is suffering as well, feeling the heat more so than the cable and the sterling pairs. So now you can remove this resistance, move this support now lower. That's the current support level. Resistance will probably start at this swing low where it broke down. And we'll see if we can pull back higher above this key 110 round figure. It dipped down to just below the 109 level to 108.85. This 162 extension is at 108.90. Let's call it 91. And if it drops even further, then the next key support level is at the 200, along with this swing low level here. If we take a look on a weekly time frame, that comes from this previous swing low across all these spikes down here. There's a bit of a zone, but the lows of about 107.75 area. This swing low is 107.78, let's call it. So it's within these region, and the 200 fib is at 107.50 area. So we could see a pullback if it goes past a bit higher. It could run all the way to test the breakdown area at the swing low before continuing back down lower. If it's able to hold this resistance, then it could just fall right from that level at the 110. It's likely going to spike through a bit higher and then drop. Okay, and this week is a key moment as well for the ECB with their meeting and their decisions. They will have a tough task on managing the expectations, and there's no rate hike in sight yet, but they'll need to either maintain their pace of tapering or accelerate the tapering so that they can complete it earlier. So we'll see what their decisions are, and we'll see if there's any boost for the euro dollar. Otherwise, the conflict will just drag it down lower. And for now, it seems that it's going to fall lower first before we find some significant support. So we can also just add this intermediate resistance. Okay. So for now, this reversal fib is still valid, and we will see if it's able to reach the 200 fib extension, so double of this range. All right, let's also take a look at the US dollar index, the DXY, and to see how that has also run up because of a safe haven trade move, because of this extended conflict now. Now here's the US dollar index, DXY, and you can see that just yesterday on Friday it shot up, blasting through this resistance and through the 9800 level right to the 262 fib extension of this previous move up. So it has move 2.6 times of this move. Right, this was the 200. Let's double that move. So that was broken early at the start of the week, and it continued to rally higher as a flight to safety for the safe haven pairs, spot safe haven currencies, Japanese yen, spot gold, some commodities, currencies, and US dollar, because the on top of it, the US dollar, the Fed is going to increase rate in March. Fed Chair Powell has already announced that during his testimony. And also with better than expected non-farm payroll jobs report, it was already on the way up, so it just added fuel to it, and until it hit the 262. But now with this bit of wick here, there could be some retracement pullback and consolidation for next week. We'll see if that's the case. So let's mark this as support for now. as well as this lower level here. Let's just extend this swing high here. And it basically broke out from this consolidation of this box towards the end of February. And once it broke out, just that was due to all the war concerns. This was the start of the invasion on the 24th of February. And after that, some volatility, but eventually just continued to break out higher last week. All right, let's take a look on a weekly time frame. We haven't really looked at it on a weekly, and yes, it has hit significant highs before. That was in early 2020 during the start of the pandemic. Now it's trying to climb up to probably not to those extremes, but it's trying to reach some areas down here. Probably this was the consolidation. Consolidation area here. Where he eventually broke back down. So let's see how much of a retracement there'll be next week, and whether it's able to find support and consolidate, or whether it's going to continue to rally higher. Okay, going back to the daily time frame. And if we take a look at a reversal move here, a recent reversal move for the last week. And it has also, there's a confluence here with the 162 fib reversal, also confluence with the 262 fib. So that's a potential resistance zone for now. And it could be further consolidation after that and pullback. All right, so let's see how the movement is next week, and hopefully the situation settle down in the Ukraine. All right, let's move back to the other pairs again. Let's move on to the cable. And also on Friday, it has dipped lower below the support level here. So this will now turn into a resistance zone. Let's move this resistance zone down lower as well. Move this support to the swing low. And it has finally fallen through the 133.00. Swing low is at the 131.60 area. And it has now closed at the 132.30 area. It did dip lower just to hit the 132.02 level, didn't quite reach the 00. So it did attempt to reach a 00 level. And beyond that, there is a wide area where it can extend lower. So, and there's no news this coming week. It's just exposed to whatever US news and perhaps whatever the ECB decides on their Thursday meeting. But for now, the cable seems to be attempting to hold off any further bearish moves. It has been resistant, and it did consolidate for the whole week until the Friday, until it fell through. So this area was consolidation area. And let's remove this for now, and as well as this levels. Like this zone as well. I think that's where we may leave this one there, because this was the 133.53, and it did fall from there on the Friday high 133.52. So that's a possible intermediate resistance level as well. So unless it's able to break through this higher through the 62 pip, then the 50 pip is going to be a key resistance zone. Okay. And for now, we'll leave this at the 138 pip extension. That's a major support level. Let's take a look on the weekly time frame. And yes, we can see that this is a support level here. Let's identify this zone. Right, so there's still quite some distance away, but past the 138 pip extension. But it needs to break down from this support zone and break down lower. If it's trying to recover, it needs to break up higher back to the 62 pip, and then back to the 50 pip level. This is likely the trading zone for now. Okay, so the pound is doing better than the euro. So if we do a correlation, the euro against the pound is going to drop down lower. So that that cross pair, you'll be able to see that. And likewise with the Aussie dollar pushing up higher, and you will see the euro against the Aussie as well as the pound against the Aussie falling drastically lower because of the this difference in the pairs direction. Let's take a look at the Aussie dollar, and it has broken out higher above the daily 200 EMA right through the resistance zone. So that is now going to be support. We can move this now to the next resistance at 138 fib extension of this reversal move, and right to the top of the upper channel trend line as well. And can move this up to the 786 retracement, which is actually the 21 fib retracement. Okay, so if there's a pullback, and it should find support along with this lower channel trend line, it bounce off the 200 lower channel trend line and this fib, so forming this support zone here, and attempting to test the 138 fib extension at 0.7450 area, almost the 50 area. And after that, we'll see how high it can go. But if it does fall back lower, then there is support at the 21 fib retracement. Okay. Let's add the next round figure level to watch out for. Big round one is going to be at 75, but that's still significantly higher. So 74 is the next one. And let's extend this channel trend line. Okay. And that was right at the intersection here, where the swing high at 100 fib, as well as the lower channel trend line where it broke out higher and right through the 200 EMA. And this is all because of higher commodity prices. So the Aussie dollar is going to benefit from that. So that's why the rally for the Aussie dollar, and it all started from the start of the week, even though it started on Monday, but on Tuesday, the RBA did not change anything, left everything unchanged, and it just paused on the Tuesday, but then continued to rally again from Wednesday onwards. So even though the US non-farm payroll figures were better than expected, it did not matter because priority or the precedence is mainly for the conflict and the higher commodity prices. All right, let's also add the swing high here. That's at 74.70. I think we can remove this for now. Okay. So the Aussie also rallying to get along with the safe haven currencies of Japanese yen, US dollar, and as well as the metals for spot gold. All right, so do check out my other videos on spot gold and dollar yen, and have a safe week and a good trading week, and cheers for now.